Welcome to the deep dive, where we try to help you cut through all that noise and really get to the heart of what's going on. And today we've got a breaking story from the world of business and tech, and we're relying on some great reporting from Reuters to this one.
Yeah, really a story that could have some serious ripple effects, through the financial world. And it really all comes back to this one
I
guy.
was going to say it all centers around one of the most recognizable figures out there, Elon Musk.
Yeah.
So we're talking about the SEC, the agency that's responsible for keeping Wall Street honest, going head to head with the richest man in the world.
It's pretty crazy.
When you're dealing with a figure like that, right? Yeah, I mean, someone with a net worth of like $417 billion.
Yeah. His decisions can really, move markets.
People definitely pay attention when he does something.
Absolutely.
So let's dive in. We're talking about this lawsuit that the SEC has filed against Musk, and it all stems from his acquisition of Twitter.
Yeah, which is now known as X. Right?
X.
It all goes back to early 2022 when Musk started buying up shares of Twitter.
And it was all very quiet at first, right? The SEC is saying that he wasn't exactly upfront about how much he was actually buying.
Yeah, the claim is that he waited too long to disclose that he had crossed that 5% ownership threshold.
11 days too long, to be exact.
Right, 11 days.
I know that might not sound like a lot, but in the world of finance, that 5% mark, that's a big deal.
Yeah, it's a huge red flag for the SEC.
So why is that 5% threshold so important? What makes it such a big deal that it triggers all these alarms?
It all boils down to transparency and fairness in the market.
Okay.
When someone acquires a significant stake in a company like 5% or more, they're required to disclose that information to the public.
Makes sense.
And that rule is there to try to prevent market manipulation
Uh-huh.
and just to ensure that all investors are on a level playing field.
Gotcha.
So the idea is that everyone should have access to the same information at the same time.
So no one's left in the dark. So basically, the SEC is saying that by waiting those extra 11 days to disclose his stake, Musk was able to gain an advantage in the market.
Yeah.
He was able to buy more shares at a lower price before everyone else caught on to what he was doing.
Right. That's the core of their argument.
And they're alleging that he essentially profited at the expense of all these other investors who didn't know what his intentions were.
Yeah, and they're not taking this lightly.
Definitely not. It sounds like they're coming after him pretty aggressively.
The SEC is looking for a substantial civil fine, and they're also asking for what's called disgorgement of profits.
Okay, so we're talking about more than just a slap on the wrist here.
Oh, yeah. This is serious stuff.
So can you explain what disgorgement of profits actually means?
So essentially, it means giving back any financial gains that you made through these illegal means.
Okay.
So in this case, the SEC wants Musk to forfeit any profits that he made by buying Twitter shares at that lower price before his ownership stake was publicly known. It's kind of like they're trying to rewind the clock and rectify any harm that was caused by this delayed disclosure.
So the stakes are high.
Very high.
And I'm guessing that Musk isn't exactly taking this lying down.
Oh, of course not.
What's his side of the story?
Well, his lawyer is calling this whole thing a multi-year campaign of harassment by the SEC.
Oh, wow.
They're saying that Musk did absolutely nothing wrong and that this was just a simple administrative error.
So just a little whoops moment?
Yeah, basically they're trying to downplay the whole thing and say it wasn't intentional at all.
I'm not sure the SEC's buying that,
I doubt it.
especially considering that this isn't Musk's first run-in with them.
Yeah, he's got a bit of a history with the SEC.
This is not his first rodeo.
No, it's not.
Remember back in 2018 when he got in trouble for those tweets about taking Tesla private?
Oh, yeah, how could we forget?
What exactly happened there?
Well, the SEC accused him of misleading investors and manipulating Tesla's stock price with those tweets. They said that his statements were reckless and that they had a huge impact on the market.
And what happened? Did he face any consequences?
Yeah, ultimately it led to a settlement with the SEC, which included a $20 million fine and some restrictions on his public statements.
A $20 million fine.
Yeah,
Ouch, even for someone with Musk's kind of wealth, that has to hurt a little bit.
maybe just a little.
So this new lawsuit against him seems to be part of a larger pattern.
Yeah, it definitely seems that way.
It raises the question, has he learned anything from his past encounters with the SEC, or is this a case of history repeating itself?
It's a good question.
And it's not just the SEC that's coming after him.
Right.
There's another group of people who are saying they were harmed by his actions, and that's former Twitter shareholders.
Yeah.
They filed a separate lawsuit alleging that they lost money because of his delayed disclosure.
They're arguing that they sold their shares at a lower price because they didn't know about his growing influence on the company.
So essentially they're saying they were tricked into selling their shares for less than they were actually worth. because they didn't have all the information.
Right, they were in the dark.
So this adds a whole other layer of complexity to this already fascinating case.
It does. It really does.
And it highlights the fact that this isn't just a battle between Musk and the SEC. It's a story that touches on all these broader issues of transparency and accountability in the market.
Absolutely. And that balance between trying to foster innovation and enforcing these regulations,
Yeah, that's a tricky one.
it really is.
This is like a financial thriller.
It really is.
Billionaires, regulators, lawsuits, a whole lot of money at stake.
It all comes down to timing.
Right, the timing of that disclosure.
Yeah, those 11 days.
The SEC is arguing that those 11 days gave Musk this huge unfair advantage in the market.
Right.
But how exactly does that work? Can you kind of break it down for us? Like, how did that alleged advantage play out?
Sure. So imagine you're an investor and you're watching Twitter's stock price.
Mm-hmm.
You see it hovering at a certain level and you think, maybe I'll buy some shares. But
Wow.
then, boom, all of a sudden news breaks that Elon Musk has bought a huge chunk of the company.
Oh, I see where you're going with this.
Yeah, what happened?
The demand for Twitter shares would skyrocket, right?
Exactly. The price is going to go way up.
Uh,
But if you had known about Musk's stake beforehand, you could have bought those shares at that lower price before the news caused that surge.
right.
So you would have had that advantage.
So the SEC is saying that he was able to buy more shares at a discount because he knew something that everyone else didn't.
Right, basically.
And that's not fair.
Not at all.
It's fascinating how just a few days can make such a huge difference in the stock market. Like, information is king.
Absolutely.
And we actually got some additional insights from this Why On news video that we looked at. And they highlighted the fact that Twitter shares jumped 27% on April 4th,
Wow.
the day that Musk finally revealed his stake in the company.
Yeah, that's massive.
That's a big jump.
It really lends some credibility to the argument that his disclosure had a real impact on the market.
So we're not just talking about this hypothetical advantage. We're
Yeah.
talking about real evidence that suggests that his actions might have actually moved the market.
Yeah, seems like there's a pretty clear link there.
And that brings up some big questions about fairness and transparency in the stock market.
Yeah.
I mean, the whole system is designed to be this level playing field.
Right, exactly.
Like I said, everyone's playing this game where they're supposed to know the rules and have the same opportunities to win.
Right.
But if someone is secretly playing by a different set of rules, it throws the whole thing off balance.
It does.
And it especially undermines trust in the system when it's someone like Elon Musk who has all this wealth and influence,
Yeah, it makes you wonder how many other investors might have been affected by his actions.
even if they weren't directly buying or selling Twitter shares.
Right, exactly.
And it's like you said, this case could have ripple effects far beyond just Twitter.
It could impact investor confidence as a whole, and it could lead to more scrutiny of these kinds of situations in the future.
Right. The SEC is sending a message here.
Yeah.
They're saying that no one is above the law,
That's right.
and that includes the world's richest man.
It seems like they're really determined to make an example out of him.
But Musk's team is fighting back pretty hard.
Oh, yeah.
They're claiming that this was all just an administrative error,
Right.
but is that really a believable defense? I mean, we're talking about Elon Musk here.
I know, right?
He's not exactly known for making careless mistakes.
Yeah. You'd think he'd have a whole team of people to handle these kinds of things.
So what are they saying?
Well, his lawyer is trying to frame this as a minor technicality, like an honest mistake with no bad intentions. But the SEC isn't buying it.
They're saying it was deliberate.
Exactly. They're saying that his actions were calculated and that he was trying to gain an unfair advantage.
So it really comes down to intent.
Yeah. Was this a genuine oversight or was it a strategic move?
And the SEC seems pretty confident that they can prove that he knew exactly what he was doing.
It sounds like they're building a strong case.
And they're not messing around with the potential consequence.
No, they're going for a big financial penalty, and they want him to return any profits that he might have made during those 11 days.
So the stakes are super high for everyone involved.
Extremely high.
The outcome of this case could have a huge impact on how regulators approach these high-profile figures in the tech industry.
Right, and how investors view the fairness and transparency of the market.
Yeah, it's all connected.
Absolutely.
This is a real nail-biter of a case. But before we get to the final verdict, there's one more piece of the puzzle that we need to explore, and that's what all of this means for the average investor. You know, someone like you listening to this deep dive. So far, we've been talking about the big names and all of this, you know, Elon Musk and the SEC and these former Twitter shareholders. But what does it mean for the everyday investor? You know, someone who's maybe not playing with billions of dollars.
Right. That's a great question because you see this case, it really goes beyond just one company or one person. It highlights these really fundamental issues that can affect anyone who's participating in the stock market.
Okay.
Like, imagine you're an investor, with a few $1,000s in a retirement account.
Yeah.
You might think, well, what does some billionaire's Twitter antics have to do with me?
Right, exactly.
But the truth is, the rules that are in place to govern the stock market, they're designed to protect everyone,
Okay.
from the smallest retail investor to the biggest institutional player.
So what you're saying is, even if I'm not directly involved in buying or selling Twitter shares, this case could still have an impact on my investments in other ways.
Absolutely. The outcome of this lawsuit could set a precedent. It could shape how regulators approach similar cases in the future.
I see.
It could affect the level of transparency that's required in these corporate disclosures
Hmm.
and, the penalties that are imposed for violations. And it could even impact the overall confidence that investors have in the system.
It makes sense. It's not just about Musk and the SEC. It's about the integrity of the whole market.
Exactly.
So if someone like Elon Musk, with all of his resources and his influence, can allegedly bend the rules without facing any serious consequences, what kind of message does that send to other companies, to other investors?
Yeah, it creates this slippery slope where more and more people start to think, well, maybe I can get away with it too. And that can erode trust in the system as a whole.
So we could see a ripple effect across the entire financial world.
Yeah, potentially. And that's why it's so important to pay attention to this case. Even if you're not, directly invested in the tech industry or following Elon Musk's every move,
Right.
because this case, it raises these fundamental questions about fairness and accountability and really the very foundation of our financial system.
And this push and pull that we've been talking about,
Mm,
between the need to foster innovation and the need to uphold regulations.
right.
How does that play into all of this?
Well, it's a delicate balance, isn't it? On one hand, we want to encourage this entrepreneurial spirit and allow these companies to push the boundaries to innovate.
Of course.
But on the other hand, we need to make sure that they're playing by the rules and that everyone has a fair chance.
So where do we go from here? Like, what are the potential outcomes of this lawsuit?
Well, the SEC is seeking a number of things. First, they want Musk to pay a substantial fine as a deterrent for any future violations. And they also want him to disgorge any profits that he may have made during that period of non-disclosure.
Right, giving back those gains that he made through that lack of transparency.
Exactly.
And are there any other potential consequences for Musk beyond those financial penalties?
Yeah, potentially the SEC could try to impose additional restrictions on his activities in the market. Like
Yeah.
they could require him to, submit any future investment decisions to a review board or something.
Wow.
Or they could even try to bar him from serving as an officer or director of a publicly traded company for a certain period of time.
That's intense.
Yeah, they're not messing around.
So it sounds like the SEC is really coming down hard on him.
It seems that way.
But let's say Musk's team wins this case.
Okay.
What would that mean for the SEC, for the market as a whole?
Well, if Musk were to win this case, it would definitely be seen as a setback for the SEC. It could potentially weaken their ability to enforce these regulations against other powerful individuals in the future.
I see.
And it could also embolden other companies and other investors to kind of push those boundaries a little bit more, knowing that the SEC might not have as much power to hold them accountable.
So we could potentially see a more relaxed regulatory environment as a result.
Yeah, it's possible, and that could have both good and bad consequences.
Yeah, how so?
Well, on the one hand, it could lead to more innovation and risk-taking, right? Which could lead to new breakthroughs and economic growth. But on the other hand, it could also increase the potential for fraud and market manipulation.
Right.
And that could leave investors much more vulnerable to these, bad actors.
So this case is a real turning point. The outcome could have a huge impact on the future of finance.
It really could, and that's why this whole thing is so captivating. We're not just watching a legal battle play out. We're watching a clash of ideologies, a debate about the very principles that govern our financial system.
We've covered a lot of ground today, and I've definitely learned a lot. But before we wrap up, what's the key takeaway for our listeners? What should they keep in mind as they're following this story?
I think the main takeaway is that even actions that seem far removed from our daily lives can have a huge impact on the economy and the markets, and that the rules that govern Wall Street, they're not just abstract concepts. They have real-world consequences for everyone who participates in the system.
For everyone from individual investors to these giant corporations.
Exactly.
So whether we realize it or not, we're all connected to this story. And it
Yeah.
really highlights how important it is to stay informed and to hold those in power accountable.
Couldn't have said it better myself.
Well said. And as this story continues to unfold, we'll be here to provide you with the insights and analysis you need to make sense of it all. And of course, a big thank you to Reuters for their excellent reporting on this case. Make sure to check out their coverage for all the latest updates.
And to stay up to date on future deep dives into the stories that are shaping our world, don't forget to subscribe to DRM News. We'll keep you informed and engaged.
Thanks for joining us on the Deep Dive. We'll see you next time.